Hello, everyone. Today's article is titled U.S. Regional Banks Hit by Credit Shock. It explores how several smaller banks in the United States are facing renewed financial pressure, caused by bad loans, fraud, and declining confidence in the system. Let's pause for a moment before we move into the article. We'll watch a short clip related to today's topic. As you watch, think about what ideas or questions it brings to mind.
Zions lost $1 billion in market cap yesterday after reporting a $50 million loss related to that alleged contractual default that it intends to fight in court. Western Alliance and Bank of California appear to be embroiled in a similar situation, although neither of them expect additional losses. Western Alliance says collateral will cover it, and Bank of California has really minimal and pretty senior exposure to that.
Now that we've seen the clip, let's take a step back. Before we dig into the details, it helps to explore a broader idea behind the story. This will guide how we understand what follows. Let's talk about financial confidence. Banks rely on trust, the belief that your money will be safe when you deposit it. But when rumors of losses or fraud spread, that trust can vanish overnight. History shows that banking crises rarely begin with numbers. They start with fear. Once people lose confidence, even healthy banks can be pulled into chaos. Why do you think trust is so fragile in the banking world, even when systems and safeguards exist? Trust in banking is emotional before it is logical. People may know their deposits are insured, but fear spreads faster than facts. In this case, a few regional banks reported fraud and wrote off millions in bad loans, sparking market panic. Investors sold shares, depositors hesitated, and confidence began to crack. Once that happens, the system becomes self-fulfilling. Fear drives withdrawals, and withdrawals cause real weakness. It's called contagion. One bank's problem infects others through emotion and speculation. The only real cure is transparency. If banks communicate clearly and regulators act quickly, they can stop panic before it turns into collapse. Now, to understand this article better, we need to familiarize ourselves with key vocabulary. We'll go over 3 important expressions. Learn their meanings and see them in action with example sentences. Let's start with write off. It means to officially recognize that a debt or asset no longer has value. In the article, one regional bank wrote off $50 million in bad loans, accepting them as total losses. Here is an example. The company had to write off its failed investment after years of losses. Next, we have contagion. It means the rapid spread of harm or crisis from one institution or person to another. In the article, analysts say the banking crisis is not yet a full contagion, but the risk is rising. Here is an example. Market contagion spread quickly after one major bank collapsed. Finally, let's look at deposit flight. It refers to the large-scale withdrawal of money from banks due to fear or lack of confidence. In the article, the 2023 crisis was fueled by deposit flight as customers rushed to pull their funds. Here is an example. News of instability triggered a deposit flight from smaller banks to safer institutions. Now that we've explored the main themes and vocabulary, let's reinforce our understanding with a summary dictation exercise. Listen carefully and fill in the blanks. Several U.S. regional banks have reported major loan losses and fraud cases, sparking renewed fears about the sector's stability. One wrote off $50 million in bad loans, and another filed a $100 million fraud lawsuit. Their stock prices plunged, dragging down the broader banking index. Analysts say weaknesses in commercial real estate and private credit lending have made smaller banks vulnerable. The situation raises concerns about confidence and credit access and brings back memories of a 2023 crisis. Let's check the answers and review what each word means. The first answer is sparking. It means causing something to begin suddenly, especially trouble or reaction. The second answer is filed. It means to officially submit or bring a case or document to authority. The third answer is fraud. It refers to criminal deception intended to gain financial advantage. The fourth answer is dragging down. It means causing something to decrease or perform worse. The fifth answer is real estate. It means property consisting of land or buildings. Well done, everyone! Today we looked at how fear and confidence shape the entire financial system. The fall of a few regional banks showed that numbers alone don't cause panic. Human psychology does. Still, when fear spreads, governments often step in to restore stability. That raises an important question about responsibility. Should taxpayers rescue banks that took bad risks? Or should markets be left to correct themselves? So here's something to think about. Should the government step in to protect investors when banks make bad lending decisions? I look forward to hearing your thoughts next time. Until then, stay informed, stay analytical, and remember, trust may be emotional, but stability is built on accountability.